Here are 4 news stories from the world of the crypto industry. First, news. Bitcoin may hit ATH by the end of this week. Bitcoin could reach a new all-time high, ATH, between June 7th and 11th, as important economic data will be released in the U.S. On June 4th, the U.S. Bureau of Labor Statistics published a report on job openings in the country. The indicator has stopped growing, which could open up prospects for Bitcoin growth, says Marcus Thielen, head of research at 10x Research. U.S. economic indicators could drive Bitcoin growth. The Job Openings and Labor Turnover Survey, JOLTS, is one of the most important economic indicators for BTC. According to the latest data, in April, 8.1 million jobs were opened in the U.S., with about 0.8 unemployed people per job opening. This is the highest figure since February 2021. In March, the number of job openings was nearly 8.5 million. Thielen believes that JOLTS could be the first of the economic indicators signaling an economic slowdown. If the economy slows down, inflation will decrease. And a decrease in inflation is a key bullish indicator for Bitcoin. Last night, the growth of another major and promising indicator, the number of job openings, significantly slowed down, he wrote. On May 15th, the Consumer Price Index, measuring inflation, fell by 0.1%. In response, BTC's rate jumped by 7%. Another 0.1% decrease to 3.3% will have a similar effect. According to CoinGecko, the top cryptocurrency by market capitalization is currently trading at $70,983. Over the past 24 hours, the asset's value has increased by 3.4%. Thielen notes that Bitcoin has exited the key consolidation triangle. Closing above this level, along with low inflation or employment data, could lead BTC to break the current ATH at $73,679. The U.S. Bureau of Labor Statistics will release an employment situation summary on June 7th. Consumer Price Index data will be released on June 11th. During this period, according to Thielen, the leading cryptocurrency could update its historical maximum. Second, news. Tether invests $18.75 million in Xrex cryptocurrency exchange. The issuer of the stablecoin USDT, Tether, has announced an investment in the cryptocurrency exchange Xrex, headquartered in Taiwan. The $18.75 million investment from Tether aims to improve cross-border payments in USDT. Together with Xrex, the issuer aims to enhance financial accessibility in emerging markets, according to the company's press release. Tether and Xrex will develop and implement solutions aimed at simplifying business payments in USDT between different countries. The collaboration is expected to make transactions more efficient and reduce operational costs. The platforms will also develop regulatory technology tools to prevent the illegal use of stablecoins. Additionally, with Tether's investment, the Xrex exchange plans to launch the stablecoin XAU1, which will be pegged to the US dollar and backed by Tether Gold. XAU1 will become a stable and secure alternative and help protect against inflation. For the release of the stable coin, the trading platform will partner with Unitas Foundation. Tether and Xrex have successfully collaborated to help law enforcement identify, arrest, and convict criminals. With strong support and investment from Tether, we will achieve even greater success, especially with our new RegTech product line, which will strengthen Xrex Group's position as a responsible financial institution, noted Wayne Huang, CEO of Xrex Group. Xrex is also supported by major players such as the National Development Fund of the Taiwanese government, CDIB Capital Group, and SBI Holdings. In addition to its license from the Financial Supervisory Commission of Taiwan, the exchange recently received registration from the Monetary Authority of Singapore. In line with its broad strategy of portfolio diversification, Tether is increasingly expanding its activities. The issuer of the largest stablecoin focuses on 4 sectors: data, finance, energy, and education. At the end of last year, the company invested in Bitcoin mining and is now actively building data centers in several Latin American countries. Recently, the issuer also invested $100 million in the well-known miner Bitdeer Technologies. Previously, Tether representatives stated that they would develop AI-based tools, driven by concerns about industry monopolization. Third, news. DMM Bitcoin to raise $321 million to compensate for hack losses. The Japanese cryptocurrency exchange DMM Bitcoin has announced plans to raise 50 billion yen, $321 million. These funds will go towards compensating clients who suffered from a recent hacker attack. DMM Bitcoin is a subsidiary of the large Japanese group DMM.com, which includes more than 20 companies. DMM Bitcoin's management shared details of its fundraising strategy. On June 3, the exchange already took out a loan of 5 billion yen, $32 million. The trading platform plans to raise another 48 billion yen, about $307.8 million, by increasing capital. This means that DMM will likely issue new shares that other divisions of the company can buy. DMM Bitcoin will also take an additional 2 billion yen, about $12.8 million, in subsidized loans from subsidiaries of DMM.com. The statement notes that all the aforementioned financial maneuvers aim to minimize the potential impact on the Bitcoin market. DMM representatives also noted that the investigation into the causes of the unauthorized withdrawal of funds last week is ongoing. On May 31, DMM Bitcoin was subjected to a massive hacker attack, during which the attackers withdrew 4502 BTC worth $305 million. Chainalysis specialists noted that the incident was the seventh largest in the history of the cryptocurrency market. The Japan Financial Services Agency demanded that the trading platform's representatives thoroughly investigate all the causes that could have led to the theft of funds. Additionally, the regulator required DMM to present a compensation strategy for affected clients. Finance Minister Shunichi Suzuki even promised that the government would strengthen security measures to prevent potential incidents in the future. The attack on DMM Bitcoin is not an isolated case in the Japanese crypto industry. In 2014, the Mt. Gox exchange fell victim to a major hack. The attackers stole 850,000 BTC worth about $500 million, affecting around 24,000 creditors. In 2018, Coincheck was hacked, losing NEM tokens worth over $500 million. Subsequently, Japanese authorities tightened cryptocurrency industry regulations nationwide, and Coincheck was absorbed by the Monex Group. In a comment to Be in Crypto, Quantum Economics CEO Matty Greenspan noted that the Japanese crypto sector seems not to learn from its mistakes. First, it was Mt. Gox in 2014, then Coincheck in 2018. By now, people should have learned not to leave their crypto assets on such centralized exchanges. Both previous hacks significantly slowed the adoption of cryptocurrencies in Japan. I suspect the same will happen this time, as people often fail to learn the right lessons from such events. However, the overall number of hacks is gradually decreasing. In May, the number of attacks on crypto projects fell by 12% compared to April. Since the beginning of the year, the digital asset industry has lost $473 million due to hacker attacks. Fourth news. What's holding Ethereum back from reaching $4,000? Ethereum's dynamics are disappointing investors. Despite a positive May, the altcoin shows little sign of life now. Ethereum is facing a critical resistance level, and overcoming it could bring substantial profits to investors. However, excessive profits have a downside that could negatively affect the price. Why is price growth bad? Ethereum's price could set a new all-time high above $4,800, but this will require significant investor conviction. Currently, the likelihood of this is low. Price growth increases the total number of coins in profit, which carries certain risks for the cryptocurrency. Once this indicator exceeds the 95% threshold, a market peak is formed, which is a bearish signal. A market peak is the highest price point of an asset before a significant decline. It often signals the end of a bullish trend and the beginning of a downward movement. The total number of profitable ATH tokens currently stands at 93%, and price growth will lead to further increases in this indicator. A probable price drop could occur due to potential sales that will begin if coin holders want to lock in their profits. On-chain analysis shows that about 30% of active addresses are now in the profitability zone. Their dominance is fraught with such profit-taking, which will lead to a price decrease. Ethereum is stuck below the 61.8% Fibonacci retracement level at $3,829. The price has remained below it for 3 weeks. This line is also known as the base of the bull market, and the price must stay above it to grow. ETH has already failed to hold this support level once. Given the increasing likelihood of the mentioned sales, another drop is now possible. In this case, the altcoin may either consolidate or fall to the 50% Fibonacci level at $3,582. However, if the 61.8% Fibonacci level turns into support, Ethereum may go up. This will allow the price to overcome the resistance at $4,000, rise to $4,100, and invalidate the bearish scenario.